Hi everyone, my name is Maria Psara. I had an advisory trading desk at ZNF Capital. I'll keep it very short. I wasn't going to give a speech today. I'll give you a bit of a background of who I am. I have been trading for quite a few years. I started at what was then big proprietary trading desks, where we were trading for the company and for institutional clients, and after some point ourselves too. And from then on moved into advisory trading, which is what I do now at ZNF Capital, where I advise clients on really how to invest, how to trade. We do specialize in short-term trading, I would say, relatively. So it would be short-term stocks and then short-term indices such as the S&P 500 or the FTSE. And now what I do these days is, as I said, give advice to my clients and hopefully help my clients learn a bit about how to then select trades themselves and how to avoid making mistakes that I have learned, we all have done, at least I have done in the past, and mistakes that I see other traders making or other clients making. So this is my role today, giving advice to clients. It is on a non-discretionary capacity, so we always give control to our clients as to what their final decision will be. I agree with many of the things that I've heard earlier. I think good trading takes time to learn, and everyone is different, so it's a personality thing as well. So I agree with the things that the two gentlemen said earlier. I wouldn't like to add anything at this point. If you'd like to ask me something, by all means. Yes?
Short-term trading means different things to different people.
Oh, of course, yes.
What is your idea of short-term?
My idea of short-term, if we are looking at it in individual equities, would be anything from a couple of weeks to a few months. If it is a news trade, a company is reporting tomorrow, we may even buy today or sell today, go short today, and exit tomorrow if it's a profitable trade. Then if we're looking at an index, short term, I would say, can be a few hours or even less than an hour. So that I would say short term. Yes.
Technical trading to help you decide what's
Yes, I use a combination of things. I use, when it is individual equities, I do look at fundamentals. So I will not buy into a stock if I don't like the company's fundamentals. But at the same time, I will not only use fundamentals and go in at any given price. So at that point, yes, I will use technical analysis. I will look at support resistance. I will wait for the stock to pull back, if I'm going long, if I'm buying, to pull back to a level where I can get a better price, and then on enter at this level. I don't use too many technical indicators. I'd say quite few, only the relative strength index, maybe a moving average, but that's about it. So it is a combination of the two, really.
Have you got a website?
Yes, of course. The website is znfcapital.com. znfcapital, all one word, .com. The company is called ZNF Capital. So J for Juliet and N for November, F for Fox, and then Capital, all one word.
I thought Zach is also involved with it.
He is correct. He is our chief market strategist.
I try to keep that quiet.
Well, I didn't, unfortunately.
Thank you, Maria.
Okay, thank you all very much.
Okay, there's not much time left. I'm going to run through the questions I prepared, difficult questions allegedly I prepared for the panel. and maybe 2 or 3 sentences each. I'd like to cover them all, but whoever likes the question, feel free to go to have a crack at it. First one, what makes a good trader? Is it just about money in the bank? Are there any psychological or any other aspects?
Money in the bank is pretty critical. I mean, you can't really be a good trader without money in the bank. I mean, firstly, you can't trade without money in the bank. So unless you've got money to put down as a deposit, you can't begin to trade anyways.
Evidence of being a good trader.
Yeah, I mean, this is profits are what ultimately the ultimate test. I mean, that's what you're doing. I mean, you can be a good trader and make a loss. I mean, a good trader will limit the loss, but we all make losses. That's inevitable. But you have to make money overall to be a good trader.
Okay. Oh, right there.
Yeah, sure. I think, obviously you need to be able to take risk. Having a sort of entrepreneurial spirit, it really does help to make a good trader. And not being too attached to it. The guys that we see that do really, really well are often not, they've maybe already made a bit of money and they're not so attached to the market.
I think it's also it's a lot about your own personality, about the trader's personality. So I think a good trader is relatively flexible. Good traders are not afraid to change their views if the market proves them wrong. So it's not about being stubborn. So I'd say this is one thing. It is certainly about money. And it is a proof about whether what we think and what we trade is right. But I'd say the psychological makeup of traders and that side of things affects very, very much so whether someone can be a good trader.
I forgot to plug my book. It came out at the same time as John's, The Mind of a Trader. And in that, I addressed what helps making a good trader, and so 2 things came to mind from that book. One is it helps to be psychotic. There's ample research which shows that psychotic people have sort of an emotional gene missing, which allows them to be very disciplined and cut losses. Might screw up the rest of their lives, but hey, you'll be good at trading. I'm not saying John's psychotic, I don't know the other panel members, but it does actually help. And I mentioned this in a serious note. I used to write a weekly column for the FT, and I take all the research from universities and put that into sort of plain English in the column. And one of the pieces of research actually showed this, that the best traders tend to be a little bit crazy. The other thing, I'm a Hindu, and it helps, and we strongly believe in detachment. The irony about being a good trader is it helps if you're detached from your rewards. You might think, oh great, well what's the point? What a catch-22 that is. You get the money and then you've got to get it only by not being bothered about it. Sadly, yeah, that's God's little trick he plays on you. It is true, without getting all David Cameron religious on you this afternoon, yeah, it'll help. I'm not saying you should all convert to become better traders by any means. We've got enough Hindus in the world. But yeah, detachment, just to underline that. Psychotic detachment will help.
Well, actually, the next question is probably my favourite. What makes for a good trading guru? How do you sort out the wheat from the chaff? Because it is a big problem that there's so many people out there who say that they can teach you, they can change you, they can transform you. What are the telltale signs of a good one?
It's really just who you can work with, I think. I mean, obviously there are people who know what they're doing and people who don't know what they're doing, but ultimately you'll find somebody who you can work with and help you. And that's not always going to be the same. I mean, the best traders may not be the best people to help you become a good trader yourself.
Yeah, I mean, yeah, good loincloth is helpful for a guru. I think my experience is learning from traders is if you find a trader is very intuitive, an intuitive trader is very, very difficult to learn from. Someone that's slightly more or has a mechanical process to go into their intuitive trades, it's a lot easier to learn.
Yes, I agree that it depends on who you can work with and who you can learn from better. But I also think it has to do. I think good gurus, same as good traders, are not afraid to say I was wrong when they are.
2 quick answers to that. One is obviously the serious one, which is track record. If you're willing to put your head on the block and you keep winning publicly, that's one thing. The flippant answer would be, look at the quality of their tan. I mean, John has got to be a good guru. Because just look at the quality. He's darker than I am. He clearly can afford, through trading, to travel the world. And I think that's the other, I mean, no offence to the more paler people on the panel. But, yeah, I think John wins it on this one.
90% of short-term traders lose money. Why do they keep bothering? Why do they? Well, it's a losing game.
Well, most of them actually stop bothering. I mean, and most of them actually get wiped out. I mean, it is a mantra some of the spread betting companies use: 90, 90, 90. 90% of traders lose 90% of their money in 90 days. And it's not surprising, because in fact my new book, Way Trade 2, is all about this particular statistic as well, and what many traders do to cause that effect, because ultimately it's up to the trader himself or herself to deal with that. But most of them don't. Most of them do give up. There's only a few who go on to succeed.
Yeah, I mean, I think it's a universal principle in everything. I don't think it's just in trading. I mean, if you look at businesses, in the first 3 years of businesses, 80% of them fail. For the following 2 years, 80% of the ones that are left fail. You're left with 4%. And I think it's pretty much just a universal law that you'll get 5% of successful people in whatever you look at. So, yeah, I think there's no difference with trading to any other business or career path.
I think 90% of short-term traders also lose money because they are in trading for the wrong reasons, and that's usually the idea that if I go into trading, I make a huge amount of money in zero time, and in my view, it is as any other job. You learn things. So this is one reason, and then it is also the fact that it is the same as every other business. So some people will fail, and the people that will stay will have to have more drive and to be better at it.
They go on because their spouses haven't discovered it yet, so they're allowed to go on. There's very little difference between the performance. If you look at the performance of hedge funds and private investors, and the critical difference when you break it down is this. As a hedge fund, if out of 100 trades we do, we might have 2 big wins. That means months where we might get more than 10%. The vast majority of the other 80% of trades will be small gains and small losses. They'll balance each other out. And that's not just us, it's pretty much every other hedge fund out there in the world. Vast majority of their trades will just be small losses and small wins with a couple of big wins. You're all used to having big wins, small gains, small losses. So what's the difference between you and a hedge fund? The key difference is we don't have big losses, private investors do. That's what keeps them going. What they do is they say to themselves, yeah, well, if I could just get rid of those couple of big losses, the rest of my performance looks pretty good, and it does. So you keep trying, you keep going, you keep persisting, but actually what you need to focus on is removing those big losses, and then it actually will look like a professional trader's performance sheet. Focus your energies on what it was you were doing when you had those big losses.
Okay, I'll just throw it open to the audience. We've got about 5 minutes before Eve will start. So, any questions?
It's for Alpesh, really. What helped your career move better? Your qualification at Oxford, I believe, is law, or winning incredibly twice consecutive years the national competition in investing?
You're very kind. You mentioned my degrees and competitions that I've won, whereas I kept it to toilet cleaning. We're not related. I'm thankful that you did mention qualification. What helped the most? Actually, again, there's been studies done that people who studied economics tend to be better at evaluating risk than those who haven't. What we'll tend to do is convert things, and you don't have to have studied formally economics, but some understand economics. And I don't mean to understand GDP and PMI and all the sort of boring stuff. You don't actually need to know pretty much any of that. But people who can then assess, as everybody on this panel will do, a probability versus a gain. So saying, well, I think there's a 60% chance based on past experience, it's going to go up 30 points versus a 50% chance it's going to drop 50 points. Well, what's my risk reward? And they calculate it. They do their expected gain versus expected losses. And that helps. I mean, it's very simple, but economists tend to, and as I say, experiments have been done where they put people in a room and they've said, right, here are some dummy trades, and the people who'd had some basic training in working out expected returns, and you can Google expected returns, they were better at it. So that actually helped. I did used to be a barrister, and that really hasn't. I helped with setting up the hedge fund, of course, because you're dealing with compliance and all the rest of it. But in terms of trading, I guess it was the economics that really made the difference. Funnily enough, it wasn't the degree in politics and all the rest of it, because on most days I don't bother reading the newspapers, and the reason for this is one of the best traders that I know is actually, and these guys will verify that, certainly technical traders, you don't really care what's happening in the news. It's good for general interest, but I don't want to be trying to second guess every single day what's going to happen as a result of something that I've read in the papers, because that's just a lot of hard work, and trying to call it right every time. I'd rather use a technical approach, or as I increasingly do, an algorithmic approach, or a statistical approach, rather than trying to understand what's going to happen as a result of the markets. I can get an opinion, but that's not a way I want to formalize trading, because you want to make it as easy and as simple as a simpler process as possible.
So is it best just to focus on technicals and just technicals or both? Is it best to master just technicals or just combine them together?
It's about your style and your personality. I mean, there are several traders using either or both, and you've got to find the one that's right for you. So I'm afraid there's no easy answer to that, unless anybody else wants.
Well, what's the answer for you?
I use technicals. I think we all use technicals. Thank you.
Well, yeah, I agree. It is finding what is right for you and what you can then stay with and not move away from if it works for you. For me, it's a combination of technicals and fundamentals, but it can be anything different for someone else.
A couple more, if there's anybody.
How many years?
How many years? How long would it take to get a good trading plan or trading?
It does vary a lot. It's a very individual type question. I'm trying to think really. We have some traders on the course who've got just a year or two, and they're doing very well. I mean, personally, I think probably about 5 or 6, 7 years, that kind of thing. And Cameron.
Well, I suppose, with everything, if you've read the Gladwell book, it takes 10,000 hours to really master something. I second that. But I think, you need a year to just get your feet wet, and the second year you'll get even more wet. And then probably the third year, that's when it could start to turn around for people. But again, it's not so much we measure things with time. It's not really about time as much as it is about effort.
It sounds to me that you could. It takes just as long to be a good trader as it does to be a doctor or a lawyer, and it'd be safer to be a doctor or a lawyer. Is that right? I mean, is it less risk or? So they're comparable things. Okay, last question maybe? Yeah?
Where's the FTSE, what's the highest the FTSE is going to reach before it rolls over? Because it must be ready to roll over fairly soon. Where's it going to roll over and when? It's an easy one for you.
Serious answer?
I'll look at it in my next report, I think. But I mean, 6950 was the high in 1999. New Year's Eve 1999 was the. So I think that's a key level. I think the case we may have seen the peak already. In fact, we got up to what, about 6, 8? I can't remember now. 6, 8, yeah. I don't think it's going to be, if it goes above 7,000, then I would think that's probably be a good time to short it. But I mean, obviously with stops.
I have no problem saying by the end of this year, at some point, it will be, say, 5 to 8% higher. It won't necessarily close 5 to 8% higher than where it is at the moment. And that's the whole bandwagon and the momentum. I'm not saying it's a sensible level, but and then I'd look to reevaluate it for next year. I was speaking to the former head of Goldman Sachs Asset Management, and of course, as well as doing God's work, which they believe they do, they also move a lot of money around. And he said, you know, we'll worry about next year when next year comes. And that's the attitude I take to it, given that you can exit the market at any time. So I'm only going to look at towards the end of this year, and I'm not panicking by any means, but I would increasingly look to pick individual stocks rather than just the index, buy and hold to the end of the year. As I say, things are increasingly getting into the territory that we all deal in, with getting in and out of individual securities, as opposed to just buying and holding, which you could easily do for the last, whatever, 4 or 5 years now.
Okay, thank you to John, Cameron, Maria, and Alpesh. Anybody wants to part with $1 million, open up an account at GNF Capital, become a pro trader or a psychotic trader or whatever you're trying to do at the moment, then you know where to go.